Hello there, folks. Frank Zavilla here, Zor Capital, and also the StockTwits Zor Traits Beta site. Doing a quick video here. I'm gonna go look at some weekly charts. This market this year so far has been dominated by a few stocks, the FANG names. You know, it is what it is. I think 70% of the returns, according to JP Morgan so far, has been from the top 10 names: Microsoft, Tesla, Apple, Nvidia, etc. And that's just in the S&P 500. For the QQQs, where the weigh-in of these stocks is roughly about 45%, probably a lot more. So what I'm going to do today is just take a look at some of these QQQ names from a weekly perspective. Right, to see if we can find something that we can hold on for longer than a cup of coffee. The market over the last month and a half or so, it's just been trading sideways. You can call this sideways. There are a lot of different types of sideways, but so far it's been a market where it's been chopping up a lot of people. We've been going nowhere fast. Very little follow through on individual common stocks. And you know, you have certain days where you're down big one day, and then the next day everything comes back up. I'll just give you a perfect example here that I'm looking up here. Just give me a second here. Here's a 30-minute chart of the S&P 500. This is pretty much within the last week or so. Down big, up big, lost it all, back up. So here in this short-term time frame, elevator up, elevator down, up, down, up, down. So that's the reason why I'm going to look at some of these QQQ names on a longer time frame. What I'm looking for is pretty much what I look for on, you know, when I'm looking at these charts. You know, stocks down multiple days in a row, multiple weeks in a row, tightness, basis. And the fact of the matter is, once you base your scans based on the way stocks actually move, okay, how they actually move, and you start to notice, where do these moves start from? Okay, I know a lot of people, you know, based on, you know, what they read in books, I'm not going to say that chart reading is wrong. What I'm saying is that a move doesn't start just when it breaks, you know, a prior resistance level, like here, right? Like a cookie cutter chart analysis would say, okay, this stock is a buy once it breaks, you know, $70 a share, $70.50. But when you look at the chart, you want to see where did the move start from? Did the move start right here? Or did the move start when it broke this high here, right? Did the move from this level to this prior resistance level, does this move actually count, right? So my suggestion is you start to look at charts from where moves are starting from. Once you start to notice what the pattern is, then you can start to create scans based on what you are noticing, okay? So let's take a look at FTNT. This is something, look, this is one that I want to watch for the future. You know, basing for the most part here for roughly, you know, call it 1.6 years, right? So I'm going to add this one to my basis. Okay, Tesla, you know, nothing there. And also, let me just give you the averages here. I got the 20-week moving average, the 10-week moving average, and the 40-week, which is the 200-day moving average. Apple. I don't want to buy something that already, you know, I'm not a big fan of looking at a big cap name that makes a 50% move and then, you know, looking at it for it to continue. Because more than likely, when a big cap name that's in the QQQs, once it makes that type of move, for example, here to here, chances are high that's going to consolidate. Another big move here. It's probably going to consolidate. Like this stock right here, IDXX, look, again, doesn't look so bad at all. You know, on the weekly chart, what I'm looking for is for the break of the previous week high. Here we can see that the 20-week moving average was resistance for a long time. It tagged it here, here. Finally, it breaks above, and now you have what I call a character change, where the 10 and the 20 week have been acting as resistance, and now, as you can see here in the short term, they're acting as support. So here, IDXX for me, for this week and this week alone, buy through this high, which is roughly 498.96, right? So let's just say 10 cents above that, 499.06, and then we can put a stop here. You can use this low here as your initial stop, 459.52, right? And that takes care of any wiggle room along with the 20-week moving average. As far as price targets, the price target is up, right? What we know that this right here is the initial stop. Now you can take the difference between the buy stop and your actual initial sell stop, and you call that 1 times risk. And whatever the difference is, call it 499 minus 459 is $40 a share. You can say that your first target is going to be $40 above 499. Okay. Let's see what else we got. Let's try to stay away from stocks underneath their 40-week moving average. Here's another stock, very similar to IDXX. You can see here the 20-day and 10-day and 10-week, acting as resistance now. They seem like they had a character change, and they're acting as support. This stock reported numbers this past week. Had a nice dip to touch that 20-week moving average. Again, this is a nice pullback. It goes from roughly the low here, 78 to 102. Again, you don't want to chase here. But look at the pullback. 1, 2, 3, 4, 5, 6, 7 weeks of pullback. Touches a 20-week and bounces hard. So I like this stock. Buy stop 91.74. The high of the week is 91.64. Buy stop 91.74. 10 cents above that. Initial stop $81 a share. AMD. This is another one, LRCX. You know, you can call this whatever you want. Inverse head and shoulders pattern, sideways action for a while. I hate to draw these lines, but if I draw lines and charts, they're just horizontal lines. But here's the stock. Again, I like the stock going through 531.49. And your initial stop, you have to give it to the 20-week moving average. So call it here 481. And I know it might seem a little wide, but let's do 532 minus 481 divided by 532. That's roughly 9.5%. But when you're looking at weekly charts, you're looking for longer term trades, right? A lot of people have a very hard time taking short term losses, right? They don't want to take a 5% loss within 2 days. But they have no issues taking a 5% loss if they held a stock for 6 months, right? Because they feel like they gave it enough time. So when you're looking at weekly charts, very simply, you want to get involved with a trade. You're looking for a bigger move, and you're looking to stay involved with the stock a little bit longer. So you need your stop to be, somewhat wide, where you're not being stopped out within the noise, right? So when I'm looking at charts and I'm looking where my stop level is, I'm looking at where the stock needs to go to invalidate the chart pattern that I see. That's where I place my stops in all my trades, whether I'm doing a weekly trade, a daily trade, or an intraday trade. And these stocks might not trigger this week. If these stocks don't trigger this week, that doesn't mean they're buy recommendations for the following week. We're going to have a brand new candle to take a look at. Again, KLAC is another one. These semis, right? So far we got 3 semiconductor stocks, and high 389.72, buy stop 10 cents above, initial stop right over here, this low, call it 368. We got 3 semi stocks, so you might want to consider what's best. buying 3 semi stocks or just taking the easy way out and buying the SMH. DXCM. Here's another one. I like to start going. I like to start going through this high 121.59. Initial sell stop again. You got to give it to the 20-week 114. Airbnb reports this week. And when I'm getting involved with these stocks, you know, 525. I'm a big believer that I think for most cases, I know a lot of people think that the stock market is like poker. I think it's a little different. I think there's a lot of randomness that goes on in the stock market. So when you have 5 different stocks, and all things being equal, right? They're all semiconductor stocks. They all pretty much have the same pattern. What I tend to do is risk the same amount into each single trade. Either that or put the same amount of money behind every single trade. There's a lot of randomness in the market. Trades are random and unique. So in a situation like, for example, AMD, let's say, for example, I have a $100,000 portfolio. And I say to myself, I want to risk $1,000 on AMD, right? What you do is you take the buy stop of 91.74 minus $81 a share. That is $10.74. You take $1,000 divided by 10.74. That means that you can buy roughly 93 shares, right? 93 times 91.64. That's an 8.5% position size. Not bad, okay? On a $1,000 risk on a $100,000 account. Costco looks good. What do we look here at Costco? I see a pattern of lower highs, lower lows, but I'm also seeing a pattern of higher lows as well. And what you see is contraction. You see this big move here? It got smaller here. Then it got smaller here. Then it got smaller here. Smaller, and now it's trading sideways, okay? This is exactly what we want to see. So I like Costco going through 500.05, buy stop 10 cents above that price, and a stop at 485. And these trades throughout the week, what I'm going to do, I'm going to put an alert at the previous week's highs, and that alert is going to last a week. I can put my buy stops in right now, and I'll put buy stop limit orders on all these stocks, and either the market puts me in or it keeps me out. And then if it puts me in, either the trades are going to work or they're not going to work. You can't control the outcome of any of these trades. We don't know the outcomes beforehand of any of these trades. Our job is to, number one, find the trading ideas. Number two, put the orders in. Number three, figure out how much we want to risk, position size, etc. And then allow the market to do whatever it is that it's going to do. And I think when you're looking at weekly charts, you're looking at less noise because you're looking at one candle. And my recommendation is that when you're looking at a weekly trade and you are initiating a position in a stock because of the weekly chart, then you should not be intermixing and looking at daily charts, and you should definitely not look at intraday charts if you initiated a weekly trade on a weekly chart. Okay? Your focus is only that one candle, that one candle is open to anything happening until Friday. Micron, right? Here's one again. Listen, you're not going to see any of my charts with these type of lines. I just don't believe in those lines. But the horizontal lines that tell me that the stock's been basing, going sideways for a while? Yes. Again, I like this stock. I don't think you have to wait until it gets above this level for you to buy it. I like the stock going through here, this high, which is 64.10. And the stop, again, you got to give it to the 20-week moving average, 58.21. That's Micron. This is one that I flagged. Let's just take a look at the Google with the L. There we go. Okay. Again, what I see here, I don't want to draw these lines, but look, it's been trading sideways, and this level is somewhat of a big level. I like this here. Okay. If I'm not mistaken, this is an inside candle, right? Which means that the high and the low were within the previous candle. One of my favorite candles, depending on the context of the chart. I like this chart. Price contraction, volume contraction. Okay, so I like this stock going through 107.99, which is last week's high, and the stop, I'm not going to give it to the 20-week, but right over here, this low, call it 102. That's the Google. Yeah, I like this one on the daily chart. I'm not going to look at it, but Intel. Again, this one also came out with the numbers. I think I read somewhere worst numbers in 8 years. I think it was Intel. The stock's reaction takes a dive, bounces off of that 20-week moving average and 10-week moving average, and look, resistance, 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 and then finally it starts to act as support. Bad news comes out, what was considered bad news, and it bounces right off of it. Like, I mean, this wasn't bowling ball action, more like a tennis ball action for that 20-week. So you can see that this is a character change. So I like this stock. Again, this is like the fifth semiconductor stock here. And by the way, I own the SOXL. Bought it on Friday, daily time frame. So if these stocks trigger, that's going to do a lot better as well. So here, high is 31.72. Buy stop 10 cents above. You got to give it to this low, which is 28.51. That is Intel. And that's it. We went through 102 stocks, and we have about 10 names. New personal watch list. Weekly 5/8. Right, so you can do your own little homework and screen these a little bit further based on whatever it is that you believe. I know a lot of people believe that, you know, only stocks that make money go up, or a stock has to be 15% within whatever it is, the 52-week moving average. You can take all those beliefs, whatever it is that you believe in, and then you can narrow down the universe a little bit further. Okay, I'm a big believer that things, you know, that a lot of trades are random and unique. We are looking at QQQ names. These are established companies across the board. So I'm going to narrow down the list. I'm going to allow the market to narrow down the list for me, right? By either triggering through my buy stop or not triggering through my buy stop. Very simple. So let me remove it. This is the wrong stock. What is it? LCRX? No, LRCX. Right, so here's the list. Let's just look at them really quick right now. IDXX, like it. Normally I don't buy stuff that's up multiple weeks in a row, but you can see here that the closes have been very tight. 517.19, 524, 529, they're right there. It's not extended like this over here. KLAC. So that's the list. So trade them well and be well. You can find me on Twitter, Zortrades. You can email me, fzarilla, 2 R's, 2 L's, .com. Have a great one.